According to Emily Fowler, we now know the 7 cities that are destined to have price plummet or values plummet in the second half of 2025. We're going to go through the list of 7, and then I'm going to kind of talk about which ones I think are right or wrong, and want to hear from you because a lot of these are very large cities. Many of these may be markets you live or invest in. So let's get into it. We'll just go in the order of the article. Emily highlighted San Francisco, Austin, Phoenix, Tampa, Boise, Las Vegas, and Denver. Again, according to Emily, all 7 of these cities are destined to have price or values plummet in 2025. I got to tell you, as somebody who has spent a bunch of his life, worked in San Francisco, I have been particularly hard on the city over the last couple of years. But given the AI, investments kind of taking over San Francisco, buildings starting to fill up, I think a price plummet in San Francisco is likely a mistake. Frankly, Austin, I also think is a mistake. That said, I think Austin is already down 15 or 20% from the June 22 peak. So thinking Austin has a lot more room to go, probably a mistake. The next one, Phoenix, no color, no data. I do look at data saying that inventory is up dramatically. The one that I was happy to see on the list is Las Vegas. As all of you know, I am shopping in Las Vegas. The more and more negative news that Las Vegas gets, the better my chances of finding a motivated seller are. So again, if you are investing in San Francisco, Austin, Phoenix, Tampa, Boise, Las Vegas, or Denver, let me hear from you in the comments below. What are you seeing? Do you think prices will plummet or values will plummet in the next 6 months? Can you believe it? Today's the last day of Q2. It's the last day of the first half. Starting tomorrow, we are already into the second half of 2025. Pretty crazy to think about. Other things I've noticed this morning, it looks like Home Depot is trying to make a play to increase volume from contractors and home improvement professionals. Home Depot is spending $4.3 billion. Yes, folks, $4.3 billion to buy GMS, a building and products distributor. We did get our first economic number of the week. It is the Chicago Business Barometer. Is basically numbers below 50 are contraction and above 50 are growth. Unfortunately, this is not looking good. Last month, it was at 40.5, which is terrible. It was forecasted to go up slightly to 43.4. Unfortunately, it came down to 40.4. Got my little guy on my lap this morning. He's being very affectionate, but he's squirming a little bit. So we'll see what Sunny does here. So again, 40.4 was the actual result. It disappointed and again is severely contracting. One might even say anemic. This does increase the data, the soft data around rate cuts. Again, if you were looking for rate cuts, you want the numbers to be weak, and sure enough. Scott Bessant was on Bloomberg this morning dropping some important data and not having very many nice things to say. Scott Bessant plainly said the Fed failed American people in 2022. That's a hard line. Failed the American people in 2022. And today they seem a little frozen at the wheel. Basically, they don't want to make another mistake. Also, later in the conversation, said they are looking to select the next Fed chair in the upcoming weeks. This was something I put out, I think, 2 weeks ago. I said that by the end of July that we would have a shadow Fed president, and not many people thought it was possible, but looks like we will be right once again. Again, according to Bessant, they will be naming the next Fed chair in the coming weeks, at which point it's going to get very, very uncomfortable. The question I have is, will the next Fed chair be somebody already on the Fed? That will be, I don't really know how that would work, right? You've got Jerome Powell, you've got the next person in a seat, and they go into the July meeting. Oh, that could get ugly. That could get ugly pretty quick. Because we got to be clear, The next Fed is going to be somebody that Trump can push around and get rate cuts and rate cuts soon. Morgan Stanley out with some notes saying the Fed will not cut in July, and also surprise folks and not cut in September. I don't know. I think not cutting in July is pretty much a layup. I don't know. Not cutting in September, that feels like a reach, but we shall see. According to Morgan Stanley, it's going to go all bad for the people that want rate cuts. It says that inflation is going to pick up in the next couple of months, and the job market will not deteriorate. So again, inflation up, job market stable, hard to cut in that environment. Brandon Turner put out a tweet the other day that I thought you and I should talk about. I would love to hear from you. Essentially, the tweet was this. He basically took a picture of something he was sent. It says, I have $45,000 saved now at 23. And I'm actively looking for my first rental property in a cheaper state where the homes are 50 to 100K. And then Brandon asks, what advice would you give them? Well, I'll give you my advice to anybody, whether you're 23 or 53, whether you have 45K, 450K, or zero saved. Tuck that money aside. You are not allowed to write offers until you've freaking done the work. You need to learn your market. You need to establish a buy box. You need to look at it every day. Until you could answer the following question, that money might as well not be anywhere. What is the average deal in my buy box? Until you can answer that question and you could succinctly say why a deal is good, bad, ugly, whatever, don't waste your money. You're gambling. Do not be in a rush to throw away your money. This is supposed to be an investing strategy. It takes time. It takes discipline. It takes focus. It takes consistency. Not until you can answer that question, what is a great deal, are you allowed to write an offer. Now, let's also step back and realizing having $45,000 saved at 23 is no easy feat. I think at 23, I might have had $45 saved. So again, congratulations. You are onto something. At 23, if you can save 45 grand, I would even go as far as to say, if you do this right, you're going to be wealthy inside of a decade. So keep doing what you're doing. Keep stacking cash, but please go do the work. I do not like the feeling I get when I get these questions, and it really feels like you're rushing, like the 45 grand in this case is burning a hole in your pocket. Stop it. Focus. Buy box. Daily discipline. Learn average. Then write good or great deals. Again, if you want help with this, you want to be around other folks going that direction, quite simply just join school. We've got 411 members as of this morning. We're doing Sunday conversations. We got 6 or 7 accountability groups and thousands of dollars in free education. So again, please don't let the 45 grand burn a hole in your pockets. Talking about school, we obviously had Jason Pritchard on yesterday morning. That video is already posted in school, as is our Thatch Nguyen conversation. All of those are in there for you to consume. I really like the conversation with Jason because, again, he's one of the top 4 real estate investors, in my opinion. He's on my personal Mount Rushmore. And he's talking about what you, the full-time employee, could do now to get ready for what is coming. We all talked about the buyer's market. We all talked about opportunity, NODs, notice of defaults, the Fannie and Freddie stuff coming down the pipeline. So again, lots of great conversation. In addition, Jason indicated his team will be sending me more data, scripts, door knocking. We're going to add that to his school classroom. So it will be all of there for you to consume. So hopefully you can do that. I was intrigued by something Mark Benioff said about Salesforce. Mark Benioff said that 30 to 50% of the work being done at Salesforce is being done by AI. So now, when you hear things like that, it depends if you're a glass half full or glass half empty person. If you're glass half empty, you could simply say, great, Salesforce can whack 50% of their headcount. Well, that's not how I see the world. How I see the world is now Salesforce could deliver more products quickly. They can iterate faster. They can take on the competition better. And frankly, they can just do more. And this is going to be the thing with AI. I know there's a lot of doomerism out there that AI is going to replace all these jobs. It's just going to be different. I lived through the world where the internet was going to take everybody's job, and that simply did not happen. In fact, more jobs were created. That said, jobs will change. Job activities will evolve. You will have to skill up. There will be some folks that lose their job. Absolutely. But again, I think on the net, as we go forward, there will be more jobs, just different than what is there today. What else do we got? We've got, I got this note. Looks like Eric Finnegan from John Burns is highlighting that sellers have less urgency to move and are not willing to mass discount, right? Deep discounts. This is really going into my thoughts about September being the month that this turns around. Again, July and August are going to be ugly months for transactions. They will be below last year. But then what happens in September? In September, a couple of things I think will happen. One is the buyers will realize that the world's not ending. World War III didn't happen. The tariff kerfuffle will be over. Net good feelings. Also, we're going to have some sellers take their properties off the market, reducing listings. However, the sellers that still have their property on the market after going through the summer, they will start to see the writing on the wall. And if they need to sell, they will start taking discounts. So again, we have really a lot of power coming. If we are buyers, we are investors. Make sure you're writing offers that are disrespectful. Make sure you follow up. And again, follow up, follow up, follow up. Looks like there's a particular type of foreclosure that is expected to jump 380% by 2035. So in the next decade, this foreclosure type is expected to almost quadruple. What is it? It's weather-related foreclosures. In fact, this is not something I've ever read about or looked into. I thought it was fascinating, but it makes sense, right? You get a hurricane or some kind of weather event that destroys your house and you have no equity. You walk. Makes perfect sense to me. According to this, who wrote this survey? Oh, I didn't write it down. My bad. But you can go look it up. It's an article. I think this was on Yahoo Finance. By 2035, weather foreclosures could account for 30% of all foreclosures. Today, they are 7%. So again, they're expecting it to quadruple. In 2024, lenders lost an estimated $1.2 billion. $1.2 billion because of weather. That is expected to increase to $5.4 billion. That is a big, big number. And likely leading to all of these insurance costs going up, up, up. Again, if you were expecting losses to go from 1.2 to 5.4 billion, that is painful. We got NAR's chief economist Lawrence Yun out in the news more and more saying the bottom appears to be in for sales. Again, AKA transactions. He's talking about existing home sales. To which Lawrence, I would say, not yet. You're close. Not yet. You're going to have an ugly July and an ugly August, but then the bottom will be in. I do have a question for you. It's something I'm actually going to talk to Taylor about in about a half hour. There is a financial analyst. His name is Rick Edelman. Rick with no K, so R-I-C, Rick. Says that it is time for investors like you and I to take our crypto exposure from 1% up to 10 to 40%. So I want to know, anybody out there in my community, do you have more than 10% of your wealth in crypto? You don't need to tell me how much. Just tell me yes or no in the comments below. Do you have more than 10% of your net worth in crypto? Yes or no? The answer for me is obviously no. I did move 1% of my net worth to crypto in 2018. I've done nothing with it. It is up quite nicely. Still about 1% of our net worth. So again, I am nowhere close to 10%, but I did think Rick's thoughts were interesting, and I wanted to ask you about that. Looks like S&P 7,000 is being discussed more and more. In fact, yesterday, Dan Bird and I talked about the chances of S&P 7,000. Yes, folks, 7,000 in 2025. I think I put the odds at 47%. I think Dan said 80%. Let us know what you think. But Ed Yardini is saying, warning of a speculative bubble in the stock market. Yes, folks, he thinks the real possibility that S&P 7,000 could happen as investors pile in and we have a melt up to a speculative bubble. Going to be interesting to watch. I guess the last thing to talk about here, we got a lot of stuff going on. I don't know if you guys saw this, but the Iced Coffee Hour had a gentleman named Charlie Kirk, I think his name is Kirk, on. And again, it was an interesting discussion. Shout out Graham and Jack for that fun. I thought a lot of the conversation at the end about whether a man should pay on the first date was interesting. So I am curious. What do you think? If you ask a lady out to dinner in a movie or whatever a date is for you, should a guy pay? Should it be 50-50? You going Dutch? Let me know in the comments below. I want to hear from you. I just have to tell you, if I invite a lady, again, I haven't done this for 30 plus years, but if I was inviting a young lady out to lunch or dinner or a movie, you bet your ass I am paying. The fact that Graham said he would go 50-50 would it's like nails on a chalkboard to me. I mean, that just feels wrong. Again, let me be clear. This is a date. You are asking her out. Are you paying? Or are you going Dutch? Let me know in the comments below. I would love to hear from you. And then lastly, let's remind you of upcoming school conversations. This Sunday at 8 a.m., we've got the one and only Derek from Seattle, the ADU guy, going to be talking about what he's doing there. Next weekend, we are looking to line up a CPA, an investor CPA accountant, somebody that the Lumberjack and I use, Bob Langworthy, because, again, a lot of you have those questions. Folks, I hope you have an amazing day. Like, subscribe, comment. Also, don't forget to check out the Zuber Letter. Go to zuberletter.com. This is a collaboration between myself and Resi Club, Lance Lambert. We put out a weekly article for free, just going deeper on some of our conversations each and every week. So I hope you have a great week. Take care. Like, subscribe, comment. And, of course, if you are buying investment properties, do yourself a favor. Get a quote from Steadily. Steadily is landlord insurance only. Anybody going out there shopping for insurance should get multiple quotes. Sometimes they can help you. Sometimes they can't. I go to them, and they have been great. They just saved me up $920 on a fourplex. So again, saving me almost $1,000 on a fourplex was awesome. Again, I put a link below. Just start the process. It's super quick. And if you're new to the game and you're looking at getting into the game, go get a quote on one of your properties just so you know how much it costs, even before you own it. This is just part of doing good work. Thanks. Take care. Later. All right, Sonny, you come by and say goodbye to everybody. Bye, guys. All right, I'm going to put you down. Thank you. Take care. Bye.